The Japanese market is signaling significant drops ahead. With just days to go before the upcoming meetings to set rates for both the FED and the Bank of Japan, we're going to analyze the impact on the markets. Today, the Japanese market opened with a gap, which leads us to believe that the bearish momentum is still in play. After all the noise generated and the sharp decline Japan experienced due to its rate hikes and the ripple effect throughout the financial system, we're now just days away from the FED meeting where it's rumored they might lower rates. This is due to the rise in unemployment and moderating inflation in the US. At the same time, we're also just days away from the Bank of Japan's meeting, where they're considering raising rates again, which would be the third hike this year. Now, let's switch to the 4-hour chart and take a closer look at the Japanese market. After this strong surge, we've entered a clear distribution phase where we could markets creak in this area. This distribution phase has already broken downward, and not only that, but it has hit its institutional target. After that, it recovered and came back to revisit the origin of the breakdown, where it reacted. Let's break this down a bit further. We can see how this break from the distribution process on the left, which I mentioned earlier, has been broken with strong bearish momentum. After the recovery, we'll need to see if we get a follow-up move. Now, we know that it's not always necessary to see an exact replication of the movement, but yes, the market tends to seek it. At the moment, we're tracking the market around this defense zone. We know that a defense zone following a distribution process means that all these sellers to the left are defending their positions. As a result, they aim to prevent the price from rising above this point, and we'll see if they succeed. We've now moved to the 1-hour chart, and we'll break down the graph even further. As mentioned, after the sharp drop, there was a recovery, and this recovery follows a pattern of impulse, channel range, and climactic action. This climactic action impacted the defense zone precisely. Typically, after climactic actions, we see a correction, but notice the disproportionate nature of this climactic action compared to the correction that followed. This tells us that the bearish impulse remains very strong. Moreover, this downward correction following a climactic action often happens in 2 phases. So we could expect, and let's zoom in a bit more here, the first impulse, a slight pause or correction, and we might see if it comes to seek its replication. But let's not jump ahead with this impulse just yet. We're going to monitor it closely with this aligned supply zone. So we'll wait to see if the price rises and reacts in this area, and only then we'll continue focusing on this bearish impulse, which we're giving a lot of importance to. Aside from everything I just explained, we're seeing that the market opened with a gap, a clear bearish gap. This gives us more reason to believe that the downturn isn't over yet. Now, let's take a look at the S&P 500. We have the 4-hour chart on the screen, but before we dive into it, I want to show you the strong correlation between the S&P 500, which is the original chart, and the Nikkei, shown in orange. Now, back to the 4-hour S&P 500 chart. What we see here is an accumulation process that pushed the price upwards. Here we have its trend line, and after the breakout, the price came back to confirm the origin of the break. Now, we wait to see how it reacts. Notice how after this impulse, there's a slight correction, and what we're expecting here is clear after an impulse and correction. The logical next step would be a replication of that movement. However, we're not seeing this as likely since the market has been showing strong bearish momentum. We saw this with Japan, and the price has also broken through this barrier. Let's zoom in a bit more so you can see it clearly. This blue barrier is none other than the POC point of control of this process, which we considered a key point. The effect here is similar to that of defense zones because what we're evaluating with the POC is that all these buyers, remember, we're coming from an accumulation phase, are trying to defend the price in this zone. This is the area of highest transactional activity, and if the price drops, their positions will turn negative. As we can see, this zone has been breached, and it was breached with significant force. So yes, we're giving a lot of weight to the bearish strength in the market. Let's now analyze the NASDAQ. But first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
On the screen, we have the NASDAQ, the 4-hour chart, and what it shows is that after hitting an all-time high, there was a recovery in 2 steps, first impulse, slight correction, and the exact replication, which impacted this defense zone. Now, after this impulse, we've had a slight pause, and we ask ourselves, just as with the S&P 500, if this will be the start of a move to seek a bullish replication. Still, although we're leaning more heavily towards the market's bearish direction, we can't ignore the structures we're seeing here, and also notice how it's impacting right now at this point, which we consider key. If we do a cross-analysis with the S&P 500, it's nothing less than the visit to the origin of the breakout we just reviewed and the visit to the POC. So It's a super critical point because if the market continues to fall, it will keep dropping with a lot of force. Otherwise, it should turn around here. But as you already know, and I've told you many times, we're expecting the price to keep falling. Now, let's analyze MicroStrategy. As we saw in previous videos, it's an asset that's highly correlated with the price of Bitcoin. Looking at the 4-hour chart, we see the price right in the middle of our defense zone, a key defense zone. And for this, let's take a quick look at the Solana chart since it makes things a bit clearer. Notice how, on a very macro level, we're talking about a daily chart, we have a bearish impulse followed by a complex corrective pattern. Right now, we're moving through the bullish ZEP pattern. This ZEP pattern has a trend line, which in Solana's case is this line here, and in MicroStrategy's case, it's this defense zone. At this point, after so many videos, we know the importance of the Z trend line, as we consider the Z alive as long as this trend line remains unbroken. So you can imagine the consequences or what it would mean to lose this defense zone. Now, let's move on to the 1-hour chart. Zooming in quite a bit, we can see here a strong bearish impulse followed by a correction. Right now, we're about halfway to seeking its replication. And as we know, the replication isn't guaranteed, but the market tends to aim for it. At the same time, this recovery in its structure is a bullish impulse, a channel, range, and climactic action. What I'm about to say might remind you of the beginning of the video when we were looking at the Nikkei key, the Japanese chart. After climactic action, the price usually reacts with a correction. But in this case, just like in Japan, this correction is disproportionate to the size of the climactic action. So we're seeing that the market overreacted to the downside, which is also giving us more bearish strength. If you want to dive deeper with much more detail into what we're seeing with Bitcoin and Solana, don't hesitate to click on the video I'm leaving on the screen, where we analyze each of them in great detail. Good luck with your positions and see you next time.